Now, amid a raging war between Ukraine and Russia and looming food and energy crisis on the horizon, global markets tanked on recession fears. Fluctuation in global markets continue with a fall in oil prices. World witnessed the steepest weekly slide of 5.8%, one of the worst since the pandemic meltdown of March 2020. The investors continue to worry that tighter monetary policies by central banks to fight the biting inflation may hamper the economic growth. The markets were stormed by the U.S. Federal Reserve's biggest rate hike of 0.75 percentage points since 1994. The first hike by Swiss bank in 15 years. A fifth rise in British rates since December, and the European Central Bank's pledge to strengthen the southern states. Wall Street's Dow Jones Industrial Average slipped to 0.13%. The S&P 500 added 0.22%, and the Nasdaq jumped 1.43%. For the week, the S&P 500 dropped 5.8%, also its biggest fall since the third week of 2020. The fears of hitting a recession supported treasury prices and slowed rise in yields surfaced amid the Federal Reserve's unconditional commitment to fight the inflation. In Asia, MSCI's broadest index of Asia-Pacific shares outside Japan fell to a 5-week low. Japan's Nikkei fell 1.8% and headed for a weekly drop of almost 7%. The yen tanked after the Bank of Japan stuck to its ultra-accommodative policy stance. The yen fell 2.2% by late Friday, bolstering the US dollar, which rose to 0.73% against a basket of major currencies. The Bank of Japan was the only outlier in a week where money prices rose around the world, sticking on Friday with its strategy of pinning 10-year yields near zero. The global markets are bearing the heat of consecutive lockdowns due to the pandemic and a waging war with one of the biggest grain and energy producer.